And then, of course, the extension off of this new balance area, which is obviously this bracket high here, to the bracket low, which is now here. And you can see where that target price is now located. You can see if I just draw the target price on the charts, guys, guess where we got to today? A target price. Target price here, price bounced, target price here, price bounced. It's almost as if there's some sort of magical quality about these areas, isn't there? There is a magical quality about it, but it's not particularly magical. I suppose it's not a magical quality then, but you've obviously got a quality about it, which is obviously the idea that there is a reason why these areas have the response that they have. Everybody knows about them in the institutional space, so people start working around this price as an exit. You can't really make it up, guys. It's not really possible to make a mistake on this call. And when you looked at the overall shape we were talking about, remember the whole point about what we were trying to discuss was the fact that the UK curve was incredibly bearish overall. The UK curve was incredibly bearish against the US curve. So on a net by net basis, the sterling market needed to be corrected to the downside. Now that's been adjusted slowly from the beginning of the month, but it's certainly not adjusted. On a macro scale basis, it's not even close to being adjusted. And we can obviously start to recognize that this small adjustment is why we're now looking at this as a possible bottom edge for the time being. It's kind of crazy, isn't it, when you think about how clear that was, and yet it was a classroom we did 4 or 5 days ago. And we told you why we were selling cable. And I think that was obviously quite a surprise for Logan when he was looking at the charts themselves, looking at it saying, well, why are you not buying a lot of cable in here? And that's where we get insight, isn't it? Because when we get questions, we answer questions and people go, right, that makes sense to me. That's something that I was not maybe looking at, or that's something that I was looking at but I didn't put enough weight on, or whatever. That's where we get breakthroughs in our trading, isn't it? By asking the right questions and getting the answers that maybe challenge your view of what's happening in the marketplace. And this has turned out to be an absolute screamer of a trade. And as I mentioned before, by putting in the measures, you've already found the exact bounce point in cable. Exact bounce point in cable right there, boom, straight off. You can't dispute it now, guys. You can't dispute it. We've got a half a dozen tweets there that said short cable, short cable, short cable, short cable, short cable. It's just that good, guys. It really is just that good. Now, obviously, you might say, well, we got lucky. Yep, maybe. But the point is, we get lucky a lot. So welcome in, guys. I hope you're all good. Obviously, yesterday's Fed, very easy to see, very easy to trade. Simply, we've been trying to make sure people do not lose sight of the duration on these trades, because like we said to everybody, the markets that you are very, very mindful of being very careful with is the 5s, 10s, and the 10s, 30s on any central bank announcement. Why? Because their responses, they are very much responses. Now, you might say, but so is the 2s, 5s. The 2s, 5s is not so much a response. The 2s, 5s is the announcement. So obviously, if they're raising rates, or if they're dropping rates, or if they're tapering back, or whatever, the 2s, 5s will reflect that exact story. The response to that story comes from the 5s, 10s, and the 10s, 30s. So if we need to strip back everything to get a good read on bonds, it's the one thing we're left with is the 2s, 5s. And the 2s, 5s is just a sweet, sweet, sweet bit of trade. And if we understand that, we can make some nice money on the 2s, 5s. We've done that with bonds from yesterday. We did it from the cash market. We did it from the top edge of bonds. We were able to get some easy money sells onto the books against the 2s, 5s. And it didn't get much easier, actually, to be honest. It didn't get much easier than just reading the 2s, 5s duration and then taking a trade against it. Now, you can see what's happened to the duration since that conversation. If you look at the 2s, 5s duration, remember, this is the actual rates. The 2s, 5s if you did a correlation coefficient of bonds in the 2s, 5s, bonds in the 5s, 10s, and bonds in the 10s, 30s, which market is nearly -1? The 2s, 5s, right? It's nearly always -1. The 5s, 10s, not quite -1. The 10s, 30s, nowhere near -1. So when we think about the correlation coefficient, the 2s, 5s really is the bond price inverted. So it's the strongest signal out of all the signals. It's not the most common, of course, because it's nearly -1. So you hardly get any durational signals off the 2s, 5s. But what we do get is when we do get a durational signal off the 2s, 5s, it is absolutely rock solid in terms of opportunity. And the best time to get directional trades, obviously, is a central bank release. A central bank release is when we get those trades. We'll take a look at what happened to the 2s, 5s coming into the central bank release. Look, the 2s, 5s was rising coming into the release in the afternoon session, and that was the sell we got in bonds before the FOMC. The 2s, 5s continue to rise on a pullback on bonds. You couldn't make it up. So if the 2s, 5s is rising, guys, the bond, just imagine this red line inverted. Where would the bond price be? This red line inverted, the bond price should be down here. Correct? The bond price should be down there if that red line's inverted. Yes? So, if the bond price should be down here with the red line inverted, and you're able to sell bonds up here, should you not be short bonds? Massively so. And obviously the sell-off on the release is unbelievable. Now we obviously peaked at this point here. So I was looking at that bond below 160 and saying, right, I'm going to draw a peak in that price level. Got to be careful with it because of the 5s, 10s. And then obviously when the price made that last leg lower here, I was finished. That was it. It was, for me personally, that was it, finished, because now you can see the 2s, 5s is now falling aggressively. I want to close off my short positions, and I want to become a buyer of bonds. Absolutely buyer of bonds at this stage. And obviously from that point onwards, using that point there and this point here, I'm able to now draw a durational line right across my screen. Based on that durational line, I'm able to buy bonds at 2 o'clock. I'm able to buy bonds here at 6 o'clock. I'm able to buy bonds here at 7:30, coming into the London bond market. And then we got this brilliant buy right off the bottom edges. Massive opportunity to make easy money this morning. At the top edge, we started to see a durational divergence up here. We started to sell, but what did we say to the guys in the room? The slope of the duration suggests that the bond price should be going higher, so we should be trying to buy back into the lows. And what happened since then? Buying back into the lows worked once, buying back into the lows worked twice here, and then we got a very, very nice buy side pop. Massive, massive, massive profits for treasury traders, and so easy as well, guys. That's the main thing about these particular signals. They are really, really so easy to spot. All you've got to do is draw lines against your 2s, 5s and get some value. Pretty good? Well, I think so. I was kind of seeing if we could get some sort of level of excitement with the bond traders this morning, but kind of fell on almost deaf ears, I think. Fell on deaf ears. We seem to be lacking in a bit of excitement about what we saw from yesterday and today. But it is what it is. Bond traders are quite hard to get motivated at best of times. So anyway, well done to anybody that took it. As I said, the big trade for us was a short cable trade. Bonds, brilliant. Oil, I've completely avoided oil. It traded up to a price I gave out as a fair value area. We were talking about this morning, and I said to the guys, it was trading about 81.80s. I said 82.50 was about fair value for oil. Around about 83.50 was a sell on oil, and around about 81.50 was a buy on oil. So we had a fair value price of 82.50s, and that's where fair value kind of rested. And since then, we've seen a little bit of value adjusting to the upside. So no trade for me on oil, and very, very happy to not be involved in the shenanigans on oil today. Quite happy to be on the sidelines. I took a Russell trade earlier, interestingly enough. You might be saying, what? Yep, I took a Russell trade earlier. I have closed the trade off, but I did take a screenshot of it to show at the time. And it did well. It did very well, thank you very much. And it came back down to retest. The dealers got very long, the Russell, and it went up to 24/14ths. So this was a screenshot I'd taken at the time. You can see it was a perfect pullback, half-back trade, and we got some very, very nice gains. We closed off the trade when it just broke up through the highs here. We closed the trade off here, but if you were still trading the Russell inside this area here, there was a nice long accumulation for anybody that wanted to buy some Russells. There was some nice long accumulation in this area here, and a very, very nice buy trade coming off exactly this, pretty much exactly the same price as I was able to buy in here the last time. And that trade went from 7s to a high price of 14s for a very, very, very nice dealer long profit. A very good dealer long profit. I'll show you what happened to the trade so that you understand what I'm talking about when I'm talking about this dealer long position. It's a perfect example, guys, of a dealer long. Let's show you it. So here's what happened next to that. So you know where my trade is. My trade at this stage was the buy trade that just came in just here. So that was my buy trade there. So it took out the highs here, and we obviously took our profits at that stage. But look at the dealer long position. Look. You see that dealer long? You couldn't make that up, could you? That's amazing. So you start recognizing the dealer longs in that position there, and you start recognizing the possibility of buying all that pullback. And obviously, look at that trade. Look at that trade. That's sensational, isn't it? Absolutely sensational. And you can see just how good that trade ultimately played out. Fantastic little trade, lovely spot, lovely find, because you know I don't trade the Russell very often. But I started to see it setting up, and obviously I went over to the Russell to take it. So it's the first time I've traded the Russell in weeks, probably, outside of spread trades. It's the first time I've taken an outright in Russell, and straight away, boom, the money. Straight into the bank account, guys. Straight into the bank account. As I said, you couldn't make it up. It's been a good day. It's been a very good day. Equities, interesting equity markets. Obviously, free money, free love from the central banks today, and they've taken full advantage of it. And we did a little class this morning about dealer positioning. We asked the question, what would your dealer positioning have been into the cash open? And we didn't tell anybody what the market was, of course. We didn't have any prices or times attached to it, but we says, what would your dealer position be? And I had a huge 3 people said that they would be long into the right-hand edge of the charts. And then I revealed to everybody what that was. Long onto the right-hand edge of the charts was a dealer long coming into the UK cash open. Long equities into the UK cash open. Look at what happened next. So all the guys, well, 3 of the guys who answered the question, all said that they would have dealer long positions coming into this opening bell here. And that's what happened at the opening bell. Look, guys, boom, straight up off that price. We went from 64s to a high print of 72s, 8 points. It's not a huge amount of money, but it's still a few $100, guys. Unbelievable, if you like, unbelievable. Huge profits. The interesting thing about that trade is we traded straight back to the cash open, which is obviously your RGL for the time being. And we started to pick up some longs in here. And again, we've just rotated it straight back up to the highs again here. And the market's just in that kind of rotational mode. Nobody really wants to commit to anything with the central banks saying what they said. Bank of England, in line with the FOMC, who was in line with the RBA. So they've obviously had a big long conversation between themselves to say that we'll go universal on this. We'll basically have a universal output, and that is because they don't want to have Bailey's, for example, saying that the inflation is permanent and fixed and it's horrible, and then have Powell saying that it's temporary and it's transitory. So they really do have these conversations. They do have these chats with each other when they're coming into their big releases about keeping a uniformity across their opinions so that one's not made to feel a little bit stupid at times. It's an old boys club, as you well know. and obviously an old women's club when Janet was part of the was part of the circuit. So you've got to remember these conversations do take place, and you can see the outcomes. More equity upside, guys, just crazy. So you saw that that was led by the Russell yesterday, and obviously the Russell's been, as you would expect in a cyclical environment, the Russell's had a very, very good period, but with these suspected lower interest rates, you'd imagine that the NASDAQ will pick up a fair pace, and sure enough, the laggard in that whole process post-release was the NASDAQ, and the NASDAQ had a sensational upside through to the close, and then all from the closing bell, the NASDAQ was straight bulls. And obviously, if you bought the closing bell on the RGL and the NASDAQ, you made a fortune in the overnight session. Absolute cleaned up massively. So, if you trade the RGLs, guess what? You've all made a fortune. Even the oil shorts that didn't stick around made over $1,000. Made over $1,000. Unbelievable. So welcome in, guys. Welcome in. Hopefully you've made your money. Hopefully you're done for the day off the RGLs from last night. If you haven't and you don't believe in making the easy stuff, well, this afternoon I think it's going to be pretty boring. There is no data this afternoon. The afternoon session I think is doomed to being boring, completely rubbish. We're looking at natural gas storage numbers at 2:30 London. We're looking at a couple of commentators from the Bank of England. Nothing much there of any interest, and we've just got no US data at all that's got any relevance whatsoever. So in that sense, we've not got anything for this afternoon to drive the markets. So it'll just take somebody having an opinion about something, or somebody having a little bit of a read about something that we can't see on the screens at the moment, because for me, I see nothing. Absolutely sweet hee-haw. Now, tomorrow we've got some good data drivers for the afternoon session. We've got the non-farm payrolls. Woo-woo! Average earnings expected to be 0.4%. Non-farm payroll employment change as people come off furlough, 455,000, with an unemployment rate dropping from 4.8 to 4.7. So we do have some really nice drivers tomorrow afternoon. But that leaves us basically with today's main driver, which is going to be what? Cash open, right? Main drivers are going to be the cash open and the OPEC, any sound bites coming out of OPEC. These are going to be the main drivers for the afternoon session, the cash open and OPEC sound bites, guys. Okay, so be aware of that. It's all going to be on oil and equities this afternoon, oil and equities. So just be primed and ready to see if these have anything for us. They are the drivers this afternoon, oil and equities. Cash open. Do they love the free money, or are they a little bit upset about the fact that taper is now in process? Do they love the idea that there is no intention to raise rates anytime soon? Do they love this process? Do they like this idea? Well, if they do, they'll buy the open. If they don't, they'll probably take some profits. Let's see what happens, guys. I will give you guys any heads up if we see any. But for the time being, I'm going to grab a little bit of lunch. Back in 10.